Hi everyone, welcome to Thursday. And like we do every Thursday, we do a share and review. Now remember, if there is a share that you would like me to take a look at, doesn't necessarily have to be on the New Zealand market. By all means, reach out, let me know, and we will take a look and just run my methodology over it. Like I say, that's the method I use. It's certainly not giving you financial advice. Just remember, though, that this is totally for education purposes. If you are looking for that personalised financial advice, you do need to go and have a chat to your own financial advisor. Right, we're going to take a look at the Total World Hedged Fund. Now, this is a smart share, and we will take a look at that first. Now, I've got smartinvest.co up here on the screen, and I've been doing a lot of investing lately into these smart shares. The reason I like them is because they are based in New Zealand dollars. So if you're at all concerned about the foreign investment fund tax rules, then this can be a way to mitigate this because it is based in New Zealand. Now, this definitely isn't tax advice or anything like that. If you're looking for that, naturally, you do need to go and have a chat to your own accountant or tax advisor. But this is one way if you are concerned around the foreign investment fund tax rules that you can get around that because this is a New Zealand-based investment. So I've gone on to Smart here, and as you can see, it's a Total World Hedged Fund, and it tracks the FTSE Global All Cap Index, so it does contain large, medium, and small cap companies all around the world. It gives us the market price, it gives us the 1 year return, which has been really stellar, gives us the dividend yield, and obviously the fund charges, and it provides us with a risk level. So naturally, because it's exposed into share markets, it is going to be a little bit higher risk or at that upper end. Gives us more details as well around when the fund actually started, how much money's in it, that sort of thing. Got the performance here, but we're going to take a look at our own using Yahoo. Gives us the returns from 1 month out to 5 years, whether you're wanting before tax, after tax, before fees, all sorts of things like that. If I scroll down a bit further, it gives us the top 10 holdings. So basically, this particular fund is really investing into the Vanguard Total World Index. So yes, you're paying a fee there, and you're also paying a fee to Smart Invest. Do your own research as to which is going to be the better way for you to do it. Naturally, we do have money held in cash here, and in this one, it's held in ANZ Bank, and a little bit there in US cash as well. If I keep scrolling, it does give us the dividend dates, when they were paid, the amount, and anything like that. And then also your product disclosure statements and other material information, all important documents when you're doing your research. But hey, let's take a look at Yahoo. So I've got TWH up here on the screen. And as you can see, this has been a really sexy chart, if you like. It's just really been on quite a strong performance. We did have the dip through here last year, which we saw a lot of shares do, and I'm pretty sure that was around when the tariff announcements and things were happening over in the States. Irrelevant, really, because I like to look at the charts and actually base my research on how the fund is naturally performing. So if I just zoom in here, last week you can see that last candle, that was a very strong buying candle. Yes, it's at the top end of the market, or it's top end of fund performance, but that's okay. If I look down the bottom, we've got good volume coming through on this particular share as well. So these were all things that caught my eye. When I'm looking at investing, I do want to see that a share or a fund is making a 70-day all-time high, and this one is definitely doing that. If I click onto the 1 year chart, and you can see naturally we've got a few ups and downs and bits and pieces, but basically where it closed on Friday, it closed at $4.61. And yes, on Wednesday, the market was a little bit higher than that. It was at $4.64, but that's really irrelevant in my view. To me, it's still making a 70-day high, purely because we're looking at that weekly chart. And if I look at the daily volume down here, look at these strong green candles when the market has been going up. Those are good, strong, positive indicators. When the market's pulled back a little bit, and if you look at the volume down the bottom, the volume contracts as well. Again, very good, strong, positive indicators. And those were certainly things that caught my eye initially. Let's go back to the 5-year chart and we'll pop our moving averages on. Again, we'll use the 30 exponential. And you can see here that the fund has certainly moved away from that 30 period moving exponential average. It's a good, strong sign, which is what I want to see. Let's also put on that 15 period. And you can see the cross happened, in other words, where the 15-week moving average crossed up through that 30-week moving average. It crossed around sort of middle of May last year. And then since then, it's been having a very strong run, which is great. It's what we want to see. And that's what I like to look at when I look at seeing a share. Fairly consistent, not too much volatility happening. If I look at the 1-year chart, again, same thing. The market is trading above that 15 period moving average. The 15-day moving average is above the 30. So again, a good, strong, positive looking share. Now, that doesn't mean shares can reverse and head the other way. And that is why I use my stop losses. But just looking at this chart, running those moving averages over it, to me, it does look very good, very attractive. Now, another indicator I'm going to use is the RSI, and we'll put that over a 10 period. Now, what the RSI is doing is you can see it's got 20 and it's got 80 at the side. Now, 20 means if a share or fund has been oversold, and the 80 indicates overbought. This is sitting at around 55, so it's somewhere in the middle. Okay, quite neutral, whether it's overbought, oversold, it's very, very neutral. The thing that I'm looking at here is, and it's a very simple technique, is this indicator facing upwards? The answer is yes. So that is a very strong indicator that this fund could continue to run. But that is also why I put my stop losses in place, just in case it doesn't. So I'll just take that one off, and I'll take those moving averages off as well. Now, going back to the 5-year chart, something else that I like to look at is the average trading range, or average true range here. And I like to put that over a 21 period. As you can see, it's brought up 0.11. Now, if I use that 0.11 and divide it by the share price of $4.617, it gives us a volatility on this particular ETF of just under 2.4%, so about 2.38%. Now, because it is an ETF, I want to make sure that there is under 5% volatility, and that's how I work it out. I put the ATR over a 21 period. It is on a monthly chart, and I simply divide that by the share price. If it's trading at 5% or more volatility, then I definitely want to keep out. Hey, it's not going to say that the share isn't going to run further. It could well do. The thing is, if the volatility is creeping in, then I want to stay out, because it just means that there's going to be a lot more potential whipsawing in a share. Now, I'll take that off, and I'm going to put on the trailing stops. You can see here, ATR trailing stops. Now, I use a 21 period. I actually like to use a 4 multiplier. I'm going to change the sell stops, make it dark, and I don't want to do buy stops. Here we go. Right. So if I'm looking at entering this share today, like I said, it's trading at $4.617. You can see down the bottom here, these dashed lines, that is where my trailing stop will be. So by entering it today, if I put my trailing stop in, that is going to be at around $4.1786. So that means that if this share falls down to that $4.17 level, the market will automatically take me out of my share. For me, it takes out that emotion. It means I do not have to be watching the market to see what's going to happen. It also stops me from second guessing, going, oh, could this run further? What if it turns around? All of these things, our mindset starts playing games with us on. I like a stop loss that's completely binary, and I've already made that decision before I enter the market. Now, as you can see, as the share has run, and if we just look at this period, basically since the middle of last year, you can see where those dotted lines are. And as this indices has been, or ETF has been increasing, you can see that these stop losses have been increasing as well. And that's exactly what I do. As the share increases in value, so does my stop loss. And even though the share might come down at some periods or some points, I still keep that stop loss there. And that is my protection mechanism. So that was something that I really wanted to show you for this week. It looks like it could be a good opportunity. Who knows? If you're going to do it, make sure you use your stop losses and definitely do your own research. Don't just go into it because it's something that's necessarily caught my eye. This is about educating you on the types of shares and things that I am looking at investing in. But hey, remember, if there is a share that you would like me to review on your behalf, pop it in the chats or reach out to me. Happy to do that, and hopefully helping you with your investing education. So until next week, take care.